Everything in this course has been building toward a single outcome. The moment when you close the last video and have a clear, complete picture of how money works and what to do with it. Not a vague sense that you should save more or invest somehow, but a specific, functional understanding of the tools available to you, how they connect, and how to use them in your own life. That is what you now have. And this final video is about what comes next. The 3 modules you completed were not arbitrary groupings. They were a deliberate sequence. Financial hardware came first because none of the other material makes sense without understanding the accounts, income, and budgeting systems that form the operational layer of your financial life. Rules of the game came second because credit, debt, taxes, insurance, and fraud protection are the environment you are operating in, and understanding the rules of that environment is the difference between navigating it successfully and being caught off guard by it repeatedly. Growth engine came last because investing, retirement accounts, and wealth building are the upper structure that sits on top of the foundation. You cannot build the upper structure without the foundation, and you cannot maintain the foundation without understanding the environment it exists within. The sequence was the point. The financial system described in the final module video is not a destination you either have or do not have. It is a structure you build progressively over time, starting from wherever you are right now. If you are starting with no credit history, no emergency fund, and some debt, that is a starting point, not a permanent condition. The sequence is clear. The tools are available. The cost of the tools is either zero or close to it. What you have now that you did not have before you started this course is the knowledge to use them correctly. One of the most important things this course has tried to communicate is that the financial system in the United States is navigable, but it is not neutral. Banks earn billions in fees from customers who do not understand the fee structures of their accounts. Credit card companies earn billions in interest from cardholders who carry balances at high rates. Predatory lenders extract money from people who do not have access to better options and do not fully understand the cost of the options they are using. Insurance companies charge premiums for coverage that may not match the actual risk profile of the person being covered. The tax code contains benefits that go unclaimed by people who do not know they exist. In every one of these areas, knowledge produces better outcomes. The gap between a well-informed financial participant and an uninformed one is not marginal. It is measured in tens of thousands of dollars over the course of financial life. The companion worksheets for each module are available on the Stepping Stones financial website, along with a glossary of over 400 terms that covers the full vocabulary of personal finance. Use them. The worksheets are designed to take the concepts from each video and apply them to your specific numbers and your specific situation. The glossary is there for every moment when a term comes up in a financial context and you want a clear, direct definition. Financial literacy is not a state you arrive at permanently after watching a course. It is a practice you maintain by staying engaged with your own financial life and continuing to build your knowledge as your circumstances evolve and as new situations require new understanding. The 3 phases of financial progress, survival, stability, and growth, represent the arc that most people's financial lives follow when they are managed intentionally. Survival means covering your basic expenses, staying current on obligations, and not falling further behind. Stability means having an emergency fund, manageable debt, a working budget, and the beginnings of a savings habit. Growth means investing consistently, building wealth over time, maximizing tax advantages, and moving toward financial independence. Most people who complete this course are somewhere in the first 2 phases. The goal is to move through them deliberately, not to skip steps, and not to stay in any phase longer than your circumstances require. A 12-month roadmap for putting this course into action looks like this. In the first month, establish your cash flow infrastructure. Open a fee-free checking account if you do not already have one. Set up direct deposit, automate fixed bill payments, and build your first monthly budget. In months 2 and 3, build your starter emergency fund of $1,000. Establish your expense tracking system and identify all outstanding debts with their balances, interest rates, and minimum payments. In months 4 through 6, begin your debt repayment plan. Confirm that you are contributing enough to your employer retirement plan to capture the full match and continue building your emergency fund toward its full target. In months 7 through 9, open a Roth IRA if you are eligible and begin regular contributions. Review your insurance coverage, set up a credit freeze at all 3 bureaus, and complete a subscription audit. In months 10 through 12, review your full financial system, evaluate your progress against the goals you set at the beginning, identify the next set of priorities for the following year, and begin the planning cycle again. 12 months from now, you will not have a perfect financial life, but you will have a system that is running, habits that are forming, and a trajectory that is pointed in the right direction. The compounding that makes investing so powerful over time applies to financial habits as well. Every month of consistent behavior makes the next month easier. Every goal reached creates momentum toward the next goal. Every component of the financial system you complete makes the overall system more resilient and more automatic. The Stepping Stones financial course was built on a single premise: that financial education should be free, clear, and built for anyone, regardless of where they are starting from. The barriers to financial literacy are not a lack of intelligence or a lack of motivation. They are a lack of access to clear, practical information delivered without jargon, without a sales agenda, and without the assumption that the person watching already has a financial foundation in place. You have now completed a course designed to give you that foundation. What you do with it is up to you, and you have everything you need to move forward.